Hello, guys, and welcome to the My Crypto Funding podcast. I am Victorious, and I'm here today with Rouge, who's one of the most profitable traders on My Crypto Funding. He racked over $40,000 in profit in the last 3.5 months. So it's great to have him here with us, and I'm going to let him introduce himself.
So, as you guys know, 𝗁𝗲𝘀𝗄𝗃, you can find me in 𝗁𝗲𝗃𝗁 alongside Victor, also in 𝗬𝗿𝗆 Traders. I've been trading cryptos exclusively since almost 6 months by now, and the growth has been quite impressive for me, and my results have been also made possible with my crypto funding backing up the capital for me.
Yeah, that's great. It's definitely really nice to see your growth because when I first got to know you, you were like really motivated to make a lot of money, but you didn't really know how to. And over the course of this, let's say half a year, you really learned how to trade. And then also, of course, using my crypto funding, you were able to like reach huge profits that otherwise with like your normal capital, it would have been a little bit different to do it. So yeah, it's really great to see you here. It's really great to see your progress and to see that you're using my crypto funding so that you can get as much as possible out from your trading experience. So for today, we've got an interesting game that we will play, and I think it's going to be really nice. In this box, we're going to be having some subjects, some topics from the crypto world, and we're basically going to be debating them. Some of them we might agree on, some of them we might not. So let's just get the first one. So the first one will be, will prop trading replace exchange trading? What do you think about this?
I definitely think prop trading cannot replace exchange trading.
Why not?
For one simple reason. Most prop firms have a cap in terms of funding. My perspective and what I have been witnessing, the usual cap is 200 to 300,000. The issue is, if you want to have more capital than that, you have to multiply the prop firms you're trading with. And you need to like synchronize accounts and copy trade them in order to like take the same trade on a bigger size, like a bigger volume. And for some people, at least 300, 400, 500,000, even 1 million of capital is not enough. That's why you have centralized exchange and decentralized exchange for like big whales to be able to trade. Some people, and we see it on a daily basis on Exo, they open positions worth 20, 30, 40 millions at the time. So definitely prop firms cannot replace the exchange and the decentralized exchange trading. They cannot even replace, I think, CFD trading as well, because this is also a new option which has been implemented for the crypto world since I think 2 or 3 years now.
Yeah, I know you trade CFDs.
Yeah.
In general, like I agree with your statement that you cannot fully replace centralized exchanges just because, like you mentioned, there are some big whales that have millions and millions of dollars in crypto, and of course, prop firms cannot replace that. But I don't think it was ever, let's say, the bigger goal of prop firms to fully replace centralized exchanges. But I think it can get to a point where trading on prop firms can have a much higher percentage than now. It will never be 100%. It will never be 99%. But I think that percentage will grow and grow just because simply, statistically speaking, if you are a trader, it's just mathematically better to trade on prop firms. Let's say you have a 10K account and you're growing it 5% per month. That's good, but you're going to reach the same profits much faster using prop firms, and your funds are technically not on any central exchange, which is also, let's say, better in the trust department. So while it will never fully replace trading on centralized exchanges, because that's something just, let's say, totally different, for most people that don't have millions and millions of dollars, it will be a great option, and many of them will switch to prop trading. How many? Personally, I don't know. I don't know if it's going to be 50% or 25%, but it's just that I personally see more and more people doing it. And I think the number will just increase because the benefits are so big for people that, again, are not huge whales in the space.
Yeah, definitely. I think the number one reason people do use prop firms, including me, is the capital they provide.
Yes.
I mean, I could trade my own money, and I'm also trading my own money on the side, but having to risk my own money and risking prop firm money is two very different feelings, and it gives you kind of a safety net when you are trading a prop firm, because you know you're not blowing your own capital when you're losing money.
Yes.
So that's at least the biggest edge prop firms give you.
Yeah, instead of trading on your central exchange account, and then something bad happens and you end up losing a lot of money from that. Technically, the worst thing that can happen is you lose your funded account, but then technically you could have lost potential profits, not actual profits, and the only thing you lose is the fee that you paid initially to get a valuation. So the downside is limited, but the upside is, let's say, unlimited. So I think that's also something that will attract a lot of people and has attracted a lot of people until now.
And also there's the second biggest edge when you trade prop firms, and I've explained that part in some of my streams. The difference when you trade live money and prop firms is when the prop firms pay you, when they do give you the payout. If the payout is multiple percent of your account, no matter the percentile of the account, like let's say 5%. An evaluation fee usually costs 0.5% of the total worth of the account. So even if by the time you make a single payout of 5% or more, you would need to like blow 10 evaluations with the prop to be at break even with them. So if you have a good system of trading, technically, if you make a single payout every 1 or 2 months of only 5%, you would need to blow 10 evaluations back to back to give back the profits to the market. Whereas if you're trading your live money, you can make, let's say, 10% on a run, on a good run, and you have a bad streak just after that, and you lose 5. So 10 minus 5, you end up with 5% over the course of 2 months. Whereas with prop firms, you wouldn't lose your money because we're not like trading like monkeys. So we do not blow 10 evaluations back to back. For us to lose everything, like technically, like for someone like me, it's almost impossible that I get to the break-even point by losing evaluations account or funded accounts. And that's the profit safeguarding is a huge edge for the trader, because basically everything that you get as payout, you keep. Yes. Because the balance starts to zero after the payout cycle. So even if you blow the account afterwards, the payout is already in your pocket and you cannot lose it. I think this is also a part of why people should take interest in prop firm trading. And even though we're like doing a podcast for my crypto funding, I'm still going to. This is like not me promoting them because they invited me, but I truly believe that the conditions they offer is insane. The conditions are insane. They have like 10-cent spread on BTC, and I'm only a BTC trader, as you know. Yeah, same. And almost no slippage and the lowest fees. That's the number one killer edge they offer is the lowest fees on the market at the moment, and this is very, very helpful. Like I've traded many other prop firms, and the closest competition is twice as expensive in terms of commissions and like basically trading fees on cryptos. Yeah, and that's another huge advantage that prop firm trading, especially trading on my crypto funding, has over trading on central exchanges. Yeah. Which is that there are some strategies that I know I can only use on MCF because my strategy revolves around scalping BTC, and as you know, that can be really expensive in fees. Exactly. So when you have fees so low, like on my crypto funding, you can use your scalping strategy really well. But then maybe if you use the same strategy on a central exchange, maybe one exchange that has more expensive fees, then your profit will be half per trade just because of the fees. So yeah, I think this environment is definitely really great for traders like me and you, especially the guys that are scalping BTC a lot. Yeah. So yeah, I really think that over the course of time, in 1 to 5 years, more and more people will migrate from their central exchange account to prop firms, and yeah, hopefully to my crypto funding, because like I said, I think at the moment the conditions there are the greatest, just like you said. There are not only upsides, the downsides of prop trading, of course, I think for most people would be the evaluation stage. You have to make past a 2-step or 1-step evaluation. And that can be a bit time consuming for people, especially if you are like very impatient or easily frustrated, because trading like for nothing at stake is a bit hard.
I definitely agree that to be a good trader, you have to have a wide skill set and to put a lot of work in. But that's just like basically for any profession, right? So moving on to the next ticket, which is actually a question, because we're speaking about skill sets that make you a great trader. If you weren't a trader, what would you do for a living?
I'll do what I've done in the past, IT consultancy.
Yeah, that's great. And do you feel like there is any skill set that's overlapping between being a trader and being an IT consultant? Is there anything that maybe has helped you make the transition from one to the other?
I think there's nothing which can be compared. I think the closest thing you can compare to trading would be an extreme sport.
Mm-hmm.
For example, being a professional kickboxer has more to do with trading than doing anything else on the computer. Because trading, at least for me, is arguably the hardest way to make easy money.
That's a great way to put it, yeah. There is something in almost every profession that can relate to trading in a way, or just one skill that is required at that profession that would make you a better trader. I've spoken to teachers and they've told me that the fact that they have to be really patient with kids helps them being patient in trading. I've spoken with DJs and they told me that the way they used to search for music every single week before their set is really similar to how they do their due diligence when it comes to altcoins. So people tend to find these similarities between jobs really easily when I usually ask this question. But yeah, maybe it will be a biased answer because I'm actually telling them to look for these similarities. And of course, like you said, there are professions that are more similar to trading than others. For example, my plan before I discovered trading was to work in physics because I have a major degree in physics. And I think they are really, really similar because in physics, you use mathematics to model the real world, and then you do some experiments and you get some data, you get some charts, you read those charts, you interpret the data, and you get to a conclusion. In trading, it's exactly the same thing. Again, you have mathematics that you use to model the real world, but you model the finance world instead of, let's say, our table in front of us. And then again, you do experiments, which in our case are trades. And then you model everything, you get all the data, you read charts, of course. And then you draw a conclusion based on that if your initial assumption of the trade was good or not. So that's why I think like they are really similar cases. And at least for me, it was really easy to move from physics to trading because the skill set is so similar. And now I'm doing a master's degree in data science. So I guess that if I weren't a trader, then I would be a data analyst in any area, be it financial or engineering or anything. But at the end of the day, it's just the same thing that I'm doing. And I think it's rather me using my skill set that I would have in another job as well in trading, because I know I'm a great data analyst, so I'm going to use that skill in trading as well. You know, I'm always about journaling and about analyzing all my data and stuff. So I think it's rather than having these overlapping skills between jobs, it's you having one skill that makes you good for one job, and then that skill you're going to use in trading as well.
I've come from a very different line of work, like before trading, and I would almost say I came to trading with many, many disadvantages. Mm-hmm. No, I didn't bring in qualities I had from my other line of works because I was doing business before. I had like business ventures, physical business ventures. I have a degree in computer science as well. But the biggest problem I took with me when I went into the trading route was the gambling issue. Because I was a huge gambler. I was a huge blackjack player back in the day. Mm-hmm. And this has like kind of... this was the only thing I took from my quote-unquote previous life before trading and after trading. This was the only thing that stayed. I did not take like the qualities that I had into trading. I took all the negatives and I had to build like everything from basically not zero but minus 50. I started with a very big
handicap,
big disadvantage, and it was an amount of work I have not put since a very, very long time in anything that I had to put in trading to make actually money.
Yeah, it was really nice to see you so motivated to become better and better, and like start out as a beginner and then make your way through all the experiences, all the trading styles, and now get to your trading style, which personally I think is really great. Like we've talked about it before. So this brings me to the next ticket, which is, I think, a little bit controversial to both of us, but it is, what is the best indicator to have on a screen?
I personally use very little indicators, almost none. I use only two. And the first one is 𝗁𝗿𝗆𝗀𝘁 by 𝗁𝗲𝗽𝗃. So it's basically just maps out daily open, quarterly open, yearly open, monthly open, previous monthly open. It's just levels. I could do that manually,
yes,
but it takes a bit of time.
It's just a faster way of doing it.
It's just a faster way of doing that. And the second indicator I was using up until now, because last week I added the third one, and I'm going to explain why. The second I was using was the VWAP, just so you have the VWAP on the chart. And the last one I have added is EMA 9 to have a trend. Basically, to look how not how, but when the trend reverses on any time frame. So it's purely for trade management, and I'm not part of the person who think like indicators are very important, because at least I managed to trade and have results without having EMA 200.
Yeah, their chart looks like a rainbow puke with so many colors, so many different things that you look at it and you say, what the hell is this? How can you understand anything from this?
They use so many indicators thinking the problem is most indicators are lagging behind the data. They are not giving data on in real time. They have some minutes of lagging, and so it gives information which are not relevant in the moment when you have to take the decision. That's also being dependent of indicators is also not a good mindset to have. You need to have so many things to be able to trade, whereas you should only, at least for me, need a chart and some other stuff on the side if you want to have Excel or whatever.
Yeah, definitely our approach is really similar in the sense that it has to be really simple and really straightforward, because that's how you make your life easier as well. And I think there are two opposites. The first one is saying that indicators help you trade, and you cannot trade without indicators because you don't have enough data without them. And then the other side is saying, no, you shouldn't really use any indicators because you can read everything from the chart. And I'm somewhere in the middle, leaning more to the right anyway, but that my idea is, the way I see it, is that yes, the chart tells you everything you need, but sometimes indicators help you save time, just like you mentioned.
Yeah.
And some other times it models the data that's already visible on the chart in such a way that's more presentable to you, so that you can faster understand what's going on. And I don't know if you would count it as an indicator, but personally I only use volume profiles. And in case you don't know what they are, and if you're watching this podcast, they're basically mapping out the volume at each level of price, and you can see where the most volume was traded and when price is going outside of the first standard deviation of that. And that's how I find my trading opportunities. And basically what it tells me is where key levels of support and resistance are. And you can see that from the chart as well. But by having this indicator on, it's much faster, so it saves time. And it also maybe makes that key level of support and resistance more visible rather than just looking at the chart, you know? So yeah, I think that's where indicators are there to help us with saving time and presenting the information that's already available in a more approachable way, rather than, oh, this indicator is going to make you profitable. Of course, when I first started out trading, I searched how to trade on YouTube, and the first thing, and I really like to see that, was a guy testing out 15 indicators, and he was like mapping out which one is more profitable. But now with 4 years, 5 years of experience, I can see that was, I wouldn't call it a scam, but impossible to be true, because he was taking 15 indicators, only trading using them. Who do you know that only has one component in their system? No one. You have to combine things, because if it would be as simple as put this indicator on your screen and trade using it and you're going to be profitable, everyone would do it, which means that no one would do it because that edge corrodes.
Yeah.
So it's more complicated than that. That even if you trade using indicators, which by all means you should if that's the way you want to do it, you have to combine indicators in such a way that it makes sense so that you're going to be profitable. There is not one single indicator that is going to make you from a beginner to being profitable just by looking at it and looking at a YouTube video. You have to understand the way it works. You have to understand with what other indicators it works. And then you're going to have to model everything through your experience to actually make that indicator work for you. My next question is, does ICT trading work? I think this is a really interesting question, because normally, like you would say, I'm using ICT concepts, but I've never watched an ICT video. But yeah, I want to hear your opinion. What do you think?
First of all, I have to say I'm not very familiar with what ICT is. I've seen this term a lot. I've seen it on YouTube a lot. People seem to use it, but I have little to no interest in like understanding what it is.
It's basically as core concepts, fair value gaps, OBs, breakers, but he's also modeling the framework in such a way that his fans would say, oh no, this is the turtle soup setup, which is from ICT, whereas for me it would be just a rate of liquidity and then a reversal in a certain context. So by all means, I think it does work, but it's not like, oh, ICT is this god tier trader and educator that if you just follow what he says, you're gonna be profitable. He's just presenting information and ways of trading that work, but still you have to make it work for you. Just by copying what he says, you're gonna have a hard time being profitable because it's not suited to everyone. So yeah, I think also, just my personal opinion is that his mentorship videos are just too long. So you have, I don't know how many videos of 2 hours, and the information is great, don't get me wrong, but I would never sit for 40 hours to watch that content. So the way I learned, because when I first started learning trading, I learned basically ICT concepts, but I would just go and find people that have watched his videos and they made a more presentable version of that, maybe a PDF, maybe a recap video or anything. But yeah, just to answer the question, I think it does work, but you have to adapt it to yourself. So yeah, and you're not using ICT concepts per se, but you have contact with people that do. So
yeah,
do you think it works? Or
from their results, yeah, obviously I cannot deny that, but it's not like in many systems or ways to trade. ICT is part of the things I'm little to no interest in learning, like to each their own, like we say.
Yeah,
I've seen one person who's only trading trend lines. I mean, if it works for them, it's okay.
Yeah, at the end of the day, that's what's important. Like, I don't care if you're trading using coffee beans or tea leaves or the stars on your sky. At the end of the day, if you're consistently profitable doing it, then that's fine, that's good. I'm not going to argue with what you're using.
Some people are even shorting because it's a full moon day. Just because of that.
Yeah, I know.
I've heard that.
I've seen that. Actually, that was one of the first things I've ever backtested in 2021 in the previous cycle, my first cycle. This guy that's just buying new moons and selling full moons. And I think the return for BTC at that point was 6x from like 10K to 60K. And if you just use that as your indicator, just buy when it's a new moon, sell when it's a full moon, you would be up like 25x. So it was definitely better than the market, although I really just don't understand how that would work. And that's why I didn't end up using it, because I only use things that I understand. Hey, if it works, it works.
It works. Exactly.
But at some point, it's, let's say, a little bit better for the control to be taken out of people, maybe. So do you think that algorithmic trading will take over from manual and discretionary trading? Is this part of trading slowly dying, and will it be replaced by robots, which is something that they have done in other jobs? Or is it something that is forever there to stay?
I think it's already happened. Like most of the trading parts, at least on BTC now, is done by algos. And this is becoming clearer and clearer like weeks after weeks. And we have been witnessing that like the last few weeks with a very simple example. At New York Open, the behavior between NQ, BTC and ES is basically the same.
Yeah, they're really correlated, yeah.
Yeah, it's basically the same. And you will often see, and this is what was happening, and this is why I personally felt that the last weeks were really hard to trade. BTC is not sweeping its levels, but NQ and ES will, and BTC is U-turning at the same time as NQ and ES.
Sometimes. But when you plan on it reversing because ES or NQ swap, then it doesn't reverse.
Yeah.
But yeah, it's funny, and it's totally true.
This is definitely done by algos. It's not done by humans.
It can also be done by humans, in a sense that if institutionalized traders see the biggest indices in the world falling, they will be generally bearish on the market, so they would sell their BTC as well. But of course, I also think that is done by algos now. And I think the reason why algos will become better and better, but also normal trading and discretionary trading will never die, because the way it works, at least from the way I see it, is you have this new strategy that is done manually by some great guy that just found it out. But at some point, to be able to extract the most out of it, you have to automate it, right? So they or someone else goes and makes it algorithmic. And then that edge, because of so many people using the same algorithm, that edge corrodes, and then the profits from those strategies are becoming less and less. So the same people or other people will search for a new strategy. They find a new strategy that at first they're doing it manually, and then they make it automatic, and then the cycle continues and continues. And of course, you're always going to have things that are fully automatic, like arbitrage trading and market making. But yeah, I think we'll always have those new strategies that are done manually, then they slowly move to being automatic, and so on and so forth. So we always have manual trading, maybe to a less degree than right now, but this part of looking for new strategies will never be taken over by robots, I think, because they don't have the ability to think and to find new things, right? They can use existing things very well, but not find new things.
Exactly. And robots needs to have humans like behind it.
Yes.
So,
well, maybe someday there will be an AI that can discover a trading strategy on their own, but I doubt it, or I think we're actually really far away from that. The next question, which I think is going to be very, very interesting because we disagree on this one. When you buy an account on My Crypto Funding, do you go for MT5 or the MCF platform?
I use MT5.
Yes, but I use MCF, so why do you use MT5?
Because it's the most used trading platform on mobile.
All right.
It's very convenient.
So you only trade on mobile?
Yeah, I do not trade on a computer.
Really?
Yeah. Never.
That's really interesting. I mean, I know that you're always looking at your phone and posting screenshots from your phone, but I assume that at least when you're home, you're looking at your PC.
I'm never using my computer to trade. I always open trade with the phone.
Interesting. That's the only reason why you're using MT5, because it's better on mobile?
Yeah, because the MT5 app on the computer is ugly.
Yes, it is.
It's very ugly.
And that's the reason why I'm not using it, because I only trade from my computer, and I'm one of those traders that has 3 screens. And I just could not trade from my phone just because I trade with all these screens, and it's actually also a mindset thing, because I know that when I sit down and I have 3 screens in front of me, now I'm at my job, I'm at my desk, so I have to concentrate on trading. But when I first started, or I tried using MT5, it felt like I went back in time like 15, 20 years and rediscovered Windows XP or Windows 95, and that's the way it looks. And for me, the user interface and the user experience are definitely really important when I'm trading. I don't want to, because I'm looking at my screen for a long time, I don't want to look at something ugly, you know. And I also want something that's as easy to use as possible. So that's why I'm always going with the MCF platform, leaving technicals aside, like, oh, this one has more altcoins, this one doesn't, this one, this. At the end of the day, for me, it's about the user interface and the user experience. So that's why, because I'm trading on my PC, I'm always going to go for the MCF platform. And I think it's the same for you, and that's why you're going with MT5 on your phone, just because your experience is better on that.
I mean, the user interface is not really what I'm looking for. It's just convenient to open trades and manage on MT5, because I can just slide stop loss and TP with my finger. I do not have to manually type.
Don't you mistype then, because you're just going to have a slider that you use?
Yeah, usually it doesn't happen. Usually. But I have done a blunder. I think it was 2 days ago.
Don't worry, blunders can happen even on the MCF platform, because it's user problem, not anything else. I opened a position with some lots on US 500 instead of BTC.
Oh, you told me, yeah.
Yeah, I told you, and I was like, whoop, why am I making so much money in such a short time? Oh, here it says US 500, not BTC. Oops, let me close this before it turns around. But yeah, some mistakes happen. But yeah, and that's why I think that having a rate interface helps, so that those mistakes happen as least as possible.
The mistake I've made, it was on the first day. It wouldn't have happened if I was on a computer, but basically I was eating, and you know the 2 and the 5 on the keyboard, when you type the lots on the MT5, the 2 is just above the 5.
Yes.
I was eating, I wasn't looking correctly. I wanted to press 2. I pressed 5. I opened the trade. I put stop loss and TP, and you know MT5 has an automatic amount calculator when you place stop loss. So you see the potential loss induced. And I was looking at my phone. I was like, "There's something wrong. There's definitely something wrong. Like the stop loss amount is too big." And the trade was already in drawdown, like going against me.
Okay, so the problem was that your risk was too big.
Yeah, the risk was too big. And I was like, do I close or do I lay open and just pray? And since I was already in drawdown and the blunder was done, I was like, oh yeah, just I'll lay run.
And how did it go?
I made 1K.
Nice. See, I did. Yeah, sometimes.
But I got rewarded for making a mistake, and this is stupid. And if I let the trade run fully up until like today, I would have made like almost 5,000, not more than 5,000. But
of course, you don't want to let mistakes go on for a very long time, because it can turn against you.
Yeah, exactly. I basically closed the trade like very, since the sizing was big, I closed it very close to the break-even point, and it made 1,000. But it was undeserved money because I mismanaged size.
Yeah. Yeah, like I said, mistakes can happen, but of course, that's why I think that the platform that you choose should be the one that you like using the most, so that these mistakes don't happen that often.
I tried once. I tried. I think it's called the Match Trader platform.
Yes.
Or something. I didn't understand how it went, and I just blew the account because I didn't like. I found the interface like ugly, first of all, but it's
I like it.
Yeah, it's personal choice, and I'm so not used to using like the mouse and the keyboard to type the things, and I feel like I'm losing time doing that.
I think at the end of the day, it all comes down with what you're most familiar with.
Yeah,
because
obviously.
the MCF platform is more familiar to centralized exchanges.
Yeah.
And the MT5 platform is something that some people would be used to if they did trade on other props that use it. So again, familiarity. Speaking of familiarity, something that we are getting really familiar with right now is artificial intelligence. Do you think it has a role in prop trading or in trading in general? Or how would you see you use artificial intelligence in prop trading? Or it has nothing to do, it can't do it?
At the moment, I don't see how AI can be used in anything related to trading.
Mm-hmm.
You can use algos, but have something autonomous trading for you just like a human. I don't think this is something we will see in the
near future.
Yeah, in the near future, no, I don't think so. What's the input you give to the AI?
The data that you would read as well, the charts and everything else. And supposedly AI, and not supposedly, but it's actually true, AI is really great at reading lots of information.
Yeah, of course.
And then drawing conclusion based off that. But yeah, I also don't think AI is, at least right now, having a place in trading. An AI will never replace a human for trades, but what it can do and what I've used AI for is build you some algos, and then those algos will trade. But of course those algos are fixed, and the AI has just been used to create that algo rather than there being an AI that learns through mistakes just like humans did and learns how to adapt the system to a changing environment. I don't think we're there yet, or at least you have to be really great at coding that machine learning environment and that artificial intelligence. And I don't think we're there yet, but I can see a world where you get an AI to trade, and through the losses, it's able to interpret the data and learn from mistakes. But I don't think it's going to become as great as a human trader. And again, I think it will be only used to build algos that then trade instead of humans. But we've already discussed that. However, I've seen, and there is this misconception, I've seen just yesterday a thread on Reddit that was saying this is how you use AI to trade options, ChatGPT specifically. And he was giving ChatGPT the interface from an option trading terminal, and he was basically just asking ChatGPT to give him some trades and some risk management ideas. And then someone in the comments was like, yeah, this is great, but you can do the same thing on this website. It's not like something revolutionary that AI does. It's just something that this website can also do. So yeah, I think we're kind of far away from that as well. I know you don't personally trade them, but what do you think about meme coins? Is it just gambling, or do they have, let's say, a greater role in the world of trading?
I've read a statistic the other day. It's like 82% of people trading meme coins end up losing. You have better odds going to play blackjack than trading meme coins. Meme coins, from my perspective, is just a glorified casino. It's just a way to gamble money.
A glorified casino, or rather a glorified Ponzi scheme?
Both. Because even if you make money trading meme coins, like making 100x doesn't make you a good trader. It's just you won the lottery ticket.
Yes, I think you're right.
There's no technicals in meme coins. There was a picture of a guy butt naked circling around Twitter. Someone made a meme coin out of that, and the coin did 300x or something. This is not trading. This is gambling.
Yeah. For God's sake, the most popular one right now is literally called fart coin.
Yeah.
It's stupid. But no, I definitely had the same idea as you. The funny thing is, I first started trading because of meme coins. My first actual, not trade, but crypto that I bought was Dogecoin.
Yeah.
Back when it was under 10 cents. And then I remember watching the screen on TradingView as it was going up. And I was watching my portfolio. It was not a lot. I think I invested $200, And that became 1,000 really fast, and then almost $2,000. And I was like, yes, I'm going to be such a good trader. But just like you said, it was a lottery ticket, because everything that I've made, or almost everything that I've made from that trade, I lost afterwards, because I didn't know how to trade. I just got lucky once, to be honest. But at the same, so that's why I started like hating on meme coins, just because, like, just like you said, they're like these glorified Ponzi schemes, because the ones who buy early, if they are lucky, will get to sell, and the ones that buy late are going to be the ones that are going to be losing. Or it's a glorified casino, just because you're just spinning that that slots machine, hoping for a jackpot, and you of course said you've got better odds when playing blackjack. But at the same time, at some point, I realized that they still have a great role in the world of crypto, and that is bringing retail in. And if only that, let's say, 10% of that retail stays and they become great traders, like I did, because like I said, I started with Dogecoin, then that's generally a good thing for the crypto market. But at the end of the day, those 90% that don't stay, they leave because they've lost money. So morally, it's bad. For the crypto environment in general, it may be good, but it's just bad in the grand scheme of things, because just the way they are made, more people are losing money than the people that are winning money. So I don't think it's gambling, because in gambling you can see your odds, and I think if they would see the odds that they have on winning on meme coins, no one would take that bet.
Oh, you do not be so sure. People still play the lottery.
Not like you're just going then there on sports betting and you see this team has 1 to 5 odds to win. Because if you would go into a lottery office and you see you have a 1 in 1.5 million chance to win.
It's even worse than that. The French lottery, you know what are the odds? If you take the whole population of Europe, there's only one winner.
Really? That's okay.
The whole Europe.
I mean, definitely meme coins are better than that, because more than one person out of Europe won with meme coins.
Yeah, definitely.
But yeah, I think if they would see the odds, they would not go and do it. But the problem is that people tend to be very vocal about the winnings, especially on Twitter, because we have, of course, the perfect example of survivorship bias. You have 1,000, 10,000, 100,000 guys that are losing, let's say maybe a few $100 on meme coins. They will never make anything public about it, maybe because it's not something really that interesting that they've lost a few $100 on a random meme coin. But that one guy that invested $10,000, if he's going to lose, he's not going to say anything. But if that meme coin goes and he's becoming a millionaire because of that, he will be very vocal about it. He will be a very a well-known story. He will get on the news. I don't know if you know the Bonk guy on Twitter. It was a guy basically that invested a few tens of thousands of dollars in Bonk when it was still, I think, on chain. And then he became a millionaire, and everyone was begging him to sell because he had like $15 million, right? And he became so invested in his own persona that he said he's never gonna sell. At that point, you don't even have that money if you're never gonna sell.
Yeah, of course, it's UPNL's not PNL.
Yeah, and that's the problem. I think people are too focused on they only see those winning stories and they're like, oh, I have a few $1,000s right now. If this guy did it, then I can do it as well. And they invest that into a random meme coin. And of course, the chances that they win are pretty slim. And they're not going to win, but they're not going to become popular because that's the norm. People lose and that's normal. So yeah, I think it's something that people should rather stay away from. There are many better things that you can do with your money than trade meme coins. I'm really curious to see what your answer is going to be. What are the best altcoins for day traders? Because we both are day trading BTC.
Yeah.
I have an idea of what this could be, but what do you think the best altcoin is to day trade?
This is a very hard question to ask to someone who doesn't touch anything outside of BTC. I've traded ETH once, stopped. Mm-hmm. I've traded Solana once as well, and it didn't work very well. But if I have to make like an objective answer, because I still have some knowledge outside of Bitcoin. Outside of Bitcoin, you should trade the coins with the most volume.
Yes.
So ETH, Solana, And I think at the moment you have like XRP, which is very, very high on volume traded. The general answer would be just trade the coins with the most volume outside of Bitcoin. If you have a trading strategy which revolves around technicals, you need volume.
Yes.
On the asset. The less volume the coin has, the more like you're subjugated to randomness, quote unquote.
And to manipulation.
And to manipulation,
Yeah, I totally agree with you. My answer would also be coins with the highest volume, of course. And I was tempted to say ETH at first, because when I first joined this trading world, ETH was seen as this higher beta, higher leverage BTC. BTC would pump 1%, ETH would go up 5%, BTC would go down 1%, ETH would go down 5%. So that would mean it would have a beta of 5. However, right now the beta of ETH is much closer to 1. And the problem is, if BTC is going down, ETH is going down more. If BTC is going up, ETH is going down less, because it's so weak compared to BTC this cycle. If you look at the ETH BTC chart, is just pure death in the last 3 years. So I don't think ETH is the one you should choose right now. I think the best one to choose, in my opinion, if you were to only focus on one, is SOL, because SOL is what ETH was last cycle in this sense. It's a higher beta of BTC. And of course, you'll have days when BTC is outperforming SOL, days when SOL is outperforming BTC. But overall, it's a coin that moves both ways with higher volatility based on what BTC is doing. That would be my answer. If I would be banned from trading BTC on my crypto funding, I would go to SOL or indices. But since we're sticking with crypto, I'm going to go with SOL.
I'll probably switch to indices.
Yeah, indices are really cool, and I think it's really nice that my crypto funding also offers indices
with no commissions. By the way,
yes, that's
no
great.
Commissions.
And
free to trade.
I would love to trade indices, but I don't know. There's just something about crypto that makes it so appealing to me. I don't know. Maybe the craziness, maybe the fact that I'm also really active on social media and on Twitter and on Twitch, and people love watching these people just trade crypto, whereas trading indices is more seen like, oh, institutions do it. But yeah, I love crypto, and I'll never leave crypto unless crypto leaves me. So
yeah, I was starting to think about trading like NQ, because BTC and NQ are just so much correlated right now, just like we talked about earlier. But this is the only reason, because it looks like BTC is just a weaker NQ. I was thinking that like 2 weeks ago, like maybe have a look at ES and NQ to see if we could do something. But way more difficult for me, at least, to calculate instantly what sizing and stuff like that.
Yes. Yeah, it's really great that my crypto funding offers these products as well. It's definitely a plus for me, because if I ever want to switch to trading that, I know I can do it on the same platform, and I don't have to go to a funding process again. Was that maybe part of the reason why you chose MCF at first, or you didn't think that far? Actually, why did you choose MCF?
Oh, because they had a MT5 integration, and the fees, the commissions are the cheapest. So you have no reason not to choose MCF.
Yeah, the fees were definitely part of the reason why I chose MCF as well. For the people that don't know me, I am scalping BTC every single day around New York Open. So then for me, these things are the most important ones. The fees that I pay, because when I'm scalping, I'm looking at sub 1% moves. And if I pay half of that on fees, what are we doing?
Yeah.
And I'm also looking at the speed of execution, because when I press buy, I want to be in that position as soon as possible. And I've definitely had an experience with previous prop firms where I would press buy and it would fill me in 5 seconds, and price would already be up so much so that I would be instantly $1,000 in drawdown. And another thing is spread. Because, of course, when you're scalping, if you're swing trading, let's say even $1 on BTC wouldn't really matter if you're swing trading BTC from 80K to 90K. But if you're scalping, even $1 can make a huge difference over a long period of time, you know. So, yeah, that's basically the reason why I chose MCF. Also, I really like, just like you said, you like the MT5 platform. I like their platform. So it was a really easy user experience for me. And again, the fees, the slippage, the environment in general, I think that's really, really great. And that's
Also,
why...
fast payouts.
Yes,
Fast payouts.
that's something that you know about, because
Most people are worried about the payouts.
I think that's normal.
Yeah, that's normal because obviously it's part of the deal between the trader and the platform. And so far, I've not waited more than, I think, 5 or 6 hours for a payout, even for big payouts. So nothing to complain about that.
Generally, you should trust anyone that you sign a contract with.
Yes.
But we've seen many cases where contracts are not honored. And I'm really happy that my crypto funding is such a trustworthy source that we don't have to worry about such problems. So yeah, I also definitely think that even letting the fact that I'm partnering with them aside, I think they are the greatest prop for crypto. And that's why personally I'm trading on them, on their platform. And yeah, I really encourage more people to just give it a try and see if it aligns with what you need from a prop firm, because everyone is different. But I think what MCF offers is definitely suitable for many, many types of traders.
Of course.
Does trading someone else's capital reduce or increase the pressure?
It reduces it.
Of course, but why?
Because it's not my money I'm losing.
Of course.
It's not my money I'm losing. I have all the upside. Meaning if I make profit, it's my profit. 80-20. Right? 20 for the platform, 80 for me. But if I lose, I'm not losing money. I'm losing paper money. So I trade with way less mental stress.
So let's say you're a small fish in a pond and you're used to trading $20-$30 stop losses. And then you come on MCF.
You take a 200K account, you see big numbers.
Yes.
It depends really on the profile of the trader. I answered based on what I am experienced with. And I can understand that if people are coming from small portfolio trading and they buy a bigger account and they see bigger P&L in terms of dollars, it can be really stressful for them, because what's not a lot of money for us might be a huge amount of money for people in other parts of the world, and it can increase the stress. Obviously.
Yes. Even though it's not your money.
Even though it's not your money.
It's still technically something that you paid for, and you see those numbers on the screen. And even though, like, psychologically you would be, you know that you should wait for, let's say, a 2% increase in your portfolio before you TP, when instead of $200, which you're used to, you see then $10,000, whoops, we've got a problem. That feels different. Yeah. What do I do? It's a lot of money. I've never had so much money in my life. What do I do? What do I do? And you panic. Let's say you're also trading on a funded account. You're always thinking about the fact that you can get the payouts from that. But when you're used to trading, let's say $500 profits, that's percentage-wise nothing on a 200K account. But if you're funded for 200K then and you're up 2K, that's just 1%, but the stress is so much higher. Even though it's someone else's capital, it could be yours, and this is the problem that affects the people that are not used to trading such big capital. So I definitely see both sides of the coin. If you're used to these big numbers, then yes, it totally reduces the pressure, because it's not your money at the end of the day that you can lose. It's just the money that you paid for the evaluation and the idea of you could make money. But if you're not used to such big numbers, it can become really, really stressful.
I really felt the difference between trading my own money and the prop firm money, and I find it very convenient. It's become stress-free in the sense that I'm not frustrated by the money loss anymore on prop trading, and it has helped me a lot.
For me, it was both. Trading on any prop account or evaluation felt like a game, and I felt no pressure in losing. But then as I progressed in that evaluation and I was maybe a few $100s away from passing an evaluation, the stress on that trade would be 10 times higher than on any trade I would have on my main account, even though that would be my real money. So I think it's, of course, just different from person to person, from case to case, And I think at the end of the day, any great trader has to know how to manage emotions, whether or not it comes from being close to passing an evaluation, being close to getting a payout that's more money than you've ever made on your personal account, or even if it's your personal money, it doesn't matter. You need to know how to manage your emotions. And I think that's something that you will get to know if you trade on prop firms in general, because otherwise you're just going to nuke through all of them and you won't make any money. So you have to learn it.
Exactly.
Nice. I think that was all the questions.
Very interesting questions.
Yes, definitely. And I think we found many questions where we both agreed, but we had slightly different views.
Exactly.
Some were questions or topics where we disagreed, but we understood why each one of us had this different view. And I think that's the basis of any great discussion, and also when you're trading. And like I said, I'm doing Twitch streams, and of course I get people in the streams that are coming in and they have a different opinion than me. And over years, I've learned that you should really accept every opinion as long as it makes sense at least 1%. Of course, is someone coming now on my Twitch stream and is telling me BTC will go to 5K tomorrow, I'm going to say, nice joke, but it's not funny, at least for me. But yeah, if it makes even the least amount of sense, you have to accept it and see where that comes from. And that's also about trading strategies, because we've discussed it. It doesn't matter what strategy someone else is using, as long as
you win.
Yes, yeah. It's good. And this is why I really hate when people come and they discredit someone else's strategy, because at the end of the day, it doesn't matter. You might disagree with it. You might say it doesn't work. If it works for him, it works.
I mean, if you coin flip a decision on trading, you're already beating like 90% of the market, because 90% of people are losing money. So
thank you guys so much for watching the My Crypto Funding podcast. It's been a pleasure for me to host it. It's been a pleasure to have 𝗁𝗲𝗀𝗃 here with us.
Thank you,
guys. You can find him as 𝗁𝗲𝗃_ on Twitter. I myself, I'm 𝗁𝗲𝗃_ on Twitter. You can find our content there as well. But what's more important is that you guys should follow this YouTube account from My Crypto Funding, because more exciting content will come out. Don't forget to like this video and share with your friends if you found our discussion interesting, so that they can maybe learn something new from us. And again, thank you so much for joining. And if you have anything else to say in the end of the podcast, feel free to do it and plug your MCF code to everything. My code personally is Victorious. What's your code, man?
Rouge.
And how do you spell it?
ROUGE. It's a French word for red. And thank you for inviting me, Victor. And thank you to the MCF team as well.
Yes, it's been a pleasure. Thank you guys so much.